Hello guys, this is Poppy FS, and today's video I'll be showing you how to do the top to down analysis. Now, this top to down analysis does not require if you are a day trader or a scalper or a swing trader or whatever type of trader that you are. This approach is definitely going to work for you. So what I do is very simple. I use a simple 3 time frame rule which I have over here. So let's get into it real quick. So now what I do is very simple. Like I said, I use this particular rule for myself, which is the 3 time frame rule. Now in this 3 time frame rule, we have 3 time frames that we're going to use for our analysis. Now the reason for this is most traders that do top to down analysis, some traders will start the analysis on the monthly time frame and then end up on like 15 minutes time frame. Now definitely what you're going to have is all confusion. There won't be clarity or any orderliness at all in that kind of approach. So, and some other traders also prefer or think that anytime they hear the higher time frame, it definitely must be all this big time frame, the weekly, the daily, the monthly and all that. Now like I said, this approach is going to work for you. It doesn't matter the type of trader that you are. So now the 3 time frame rules, let's talk about it. So we have our higher time frame, the mid and the lower time frame. Now each of this time frame have an objective. So on your higher time frame, the job you are to do is to figure out the trend. There are several systems. Like I'll be honest with you about this one. When I talk about higher time frame, the one I have for you here is just one of the systems, like one of the numerous systems that I use in approaching higher time frame. Okay, sometimes I talk about trends, sometimes I just talk about candles. So like I said, I can't teach everything on this YouTube channel. So definitely I will just show you some of the general things I know traders are more kind of used to. So over here, if I say determine the trend, now we understand that the trend of the market, let's assume an uptrend. So if I have this as an uptrend now, so the job I said is after determining the trend, which obviously we know that okay, the trend is an uptrend, buyers are in control. The second thing is to determine the directional bias. Now this particular one has a lot of query because traders have different meaning to directional bias. So for this particular reason or this purpose here, the directional bias is for you to determine whether you want to do the pro trend or you want to do the counter trend. Now pro trend simply means trading along with the trend. For example, if I know that this is an uptrend and I wish to trade along with the trend, so definitely I already understand that the market must make a retracement, right? Correct. Like after market is like, it's an uptrend and I want to trade along with the trend. So what I would do is find the range, which is the Fibonacci to get my range, my premium, my equilibrium level. So the equilibrium is this level here, right? And below the equilibrium is my discount level, which is where I'm expected to buy. So now if my bias is going along with the trend, then I already know that okay, I'll be buying from discount. So that will be the first thing I will determine on the higher time frame. I will determine the bias. Am I trading along with the trend or I will be doing counter trade, maybe till price gets to the discount level. For example, now price is currently at the premium. So you choose whatever you want to do. If you are the kind of trader that you are more patient and you want to wait for price to get to the discount before you trade, then that is your bias. You are going only along with the trend. So now after you determine whatever thing you want to do or whether you want to do counter trend. So counter trend simply means you're looking for opportunities for sales before price gets into the discount level or the area it wants to buy from, to continue the order flow. Do you understand? So you choose whatever bias you want to go with, either along with the trend or doing the counter trend. Okay, now the second thing, or let's say the third thing you do on the higher time frame is determine the targets. So I will show you targets based on the bias you choose. So if you choose the pro trend, that means you intend to buy at discount. So when you buy at discount, now for now I'm not telling you the exact POI you are buying from or where you are going to buy from. You are not doing that on the higher time frame. So when you are buying at discount on the on this higher time frame, definitely your target is going to be where the previous high. Okay, that's what we advise. When you are buying, you choose the previous high as your target. Don't be greedy because we don't control the market. For example, if I'm targeting maybe somewhere around here, the impulse are things that we don't have control over. So you can't tell me that you know exactly where the impulse is, except if you are using maybe a trick like the Fibonacci extension, because Fibonacci extension can also tell us where price is expected to get to. But for basic class, I always advise you take your profit at the previous high. That's the first area you take your profit. So according to the pro trend, if you buy from discount here, your target definitely should be to the previous high over here. So let's say, and of course, that will be your TP level, your take profit level. So over here will be your area to take your profits. And the higher time frame generally is to build the narrative. Okay, that's where you build the whole narrative you are trying to play or trying to trade. Then on the mid time frame, this is the additional one I added because I know we are more familiar with higher time frame and lower time frame, but the mid time frame now has its own job. That is where you mark your POI. So most times it is not advisable to mark POI on the same higher time frame you start analyzing from, because it won't be clear. You know what, for example, that you can find an order block on higher time frame and that order block is no longer valid on lower time frame. So you should not use the higher time frame that you start analyzing from to get your POI. Now, I would say that this particular thing now is subject to review in some cases. You know, I don't want you to just take this particular statement now and take it as the final bus stop or the final word. You know, sometimes you have to use your discretion. Do you understand? Because it depends on what the market presents, and I can't handle all of that right now in this video. So we are going to work with a baseline, which for now is you choose your time for your POI on lower time frame. So that is the agreed level or agreed thing we are going to choose for now. So depending on whatever you come across, whatever market you come across, you choose your discretion. So now the second thing is on the mid time frame, you get clarity of structure, order flow is clearer, and now your objective on the medium time frame. Take note, your objective is to mark out your zone of interest. Now, it doesn't have to be the POI only. There are other instances that you are going to get your internal range liquidity. You know, for example, if price is going from external range to internal range, you might not get that internal range clearly on the higher time frame, and you'll see all those internal range, maybe hanging fruit to internal range structures, you know, all of those things. You might see them clearly on the mid time frame, and it will be present on the higher time frame. So the major reason for the mid is to get the zones of interest. Then finally, your lower time frame is where you refine your POI. So whatever POI you see on your medium time frame is to be refined on the lower time frame. And there are other instances that the POI will not have a need for refinement anymore. Okay, so you just go with the POI directly. Then of course, determine the risk on the lower time frame. Okay, which is why when you go to a lower time frame, you know, by the time you take it all the way down to lower time frame, the picture becomes bigger and your stop loss also will become smaller. So your job as a trader is to figure out your stop loss on lower time frame. Can you now see how it works? Your TP level should be seen or determined on the higher time frame, where you go all the way to the lower time frame to figure out your stop loss. And one other thing that you not add here is the entry. So on the lower time frame is where you make entry. So when you enter a trade on lower time frame, your objective is to get precise entries and low risk trades. So every time frame has their objective and the job they are doing for you, and you must go along with the flow to do a proper top to down analysis. Now, I'm sure you are wondering, okay, how do I know the time frame to go to next? Now, I'll be recommending the time frame for you now with a table. So I want us to go over to that table now. Okay, this is it over here. So I made a table that is going to speak to every type of trader. So it doesn't matter the type of trader that you are, like I said. So over here, we are starting with position traders. So if you're a position traders are those that hold trade for longer period of time. Like they can hold trade for a couple of months. They are called position traders. Then we have the long-term swing traders. We have short-term swing traders, intraday traders, scalpers, and fast scalp traders. Okay, so now as a position trader, your higher time frame should be on the monthly time frame. Okay, so and the second one is the mid time frame, which is the weekly time frame where you get your clarity, and your lower time frame where you get your entry should be your daily time frame. Now you can see I'm adding 4 hours to it. That's to tell you that there are other cases whereby you might also want to go lower. You know, of course you understand what you have to do, but then you don't want to be rigid with the rules, because normally I would have said daily and then you just stop at daily, but then I want you to be flexible around it. But then being flexible doesn't mean you should now go crazy with it though, but you just know exactly what you have to do and what you have to look for. Then the second one is long-term swing trader. So A long-term swing trader is classified as someone that can hold a trade for a couple of weeks, 3 weeks, 4 weeks, and 5 weeks, whatever it is. They are they are the kind of guys that will hold a trade for that couple of weeks. Now, let me give you an hint that tells us the duration your trade is going to take, depending on the time frame you start from. For example, if you start on the monthly time frame, clearly a monthly time frame structure will look like this. Whatever the structure is now, if you start on monthly and you have this kind of structure on monthly, now this is where it gets easy to know how long your trade is going to take. So let's assume that you are taking a buy on the monthly time. You are patient, you are going along with the trend and all of that. Now remember, your target is going to be figured, or is going to be at the previous high over here. So you have your TP to be this previous high. You can place your magnet over there. So this is what you do on the higher time frame. So this POI here, you already got on your medium time frame that has been refined on lower time frame. So you're buying from here, or like you're buying from this level to this high. Now remember, your TP was determined on the higher time frame, which means the market now, after getting entry on the so-called lower time frame, by the time the market starts moving on the monthly time frame, you have this kind of candle. This is a delivery candle on the monthly time frame, right? So now that is why we say it can take a couple of months. We're talking about 3 months, 5 months, 10 months before price gets to your target in some cases. Now, do you see this now? Because of the trend and you're on the monthly time frame, how many candles will it take you to get to the previous high? Now I'm counting about 5 or 6 over here. Now this is because I'm even using my chart over here, like my own sketch. If you go to a real-time situation, it can take 10 candles before getting to the target. It can even take longer than that. So that is what adds to the length of time you spend on a trade before getting to your target. So, and that is because you are using a monthly time frame. So if this trend was also figured out maybe on the 4 hours, maybe you have this on the H4 time frame. Now it's going to take a couple of 4 hours candles to get to your target, and that can be achieved maybe within a day or max within less than 48 hours. You're already done. Do you understand? So that is why, or that is exactly how the time frame you start influences the duration of your trade. Do you understand? So now moving on to short-term swing traders. So you can see the exact things, like the exact rule and the suggestion of what you should use as your higher time frame, as your mid, or as your lower time frame, which means you can see me opening my chart now and I start on 1 hour time frame. There should be nobody coming to come and say, why would you use 1 hour as your higher time frame? Is a lower time frame? No, because it depends on the type of trader that I am, and of course the duration or the length of time I will spend on the trade. If I start on 1 hour time frame, that means within a couple of hours I'm already at my target and done. If I start on 15 minutes, that's even much faster again. So that is exactly what you should do with all of this. So I'll be making in another episode. In that episode, I will now make examples, because I know you guys want to know. Yeah, go to the chart, show us how you did it on the chart. Now don't worry, I'll be making another episode, and in that episode I'll be making it as a position trader, or as a long-term swing trader, or short-term. Like, I will just take each of this type of trader as a case study, and I'll give you a full breakdown, maybe 3 or 4 examples of each. Maybe any currency pair. We'll just do it like, if I was a swing trader or maybe a position trader, this is what I would do. I'll go to a monthly time frame. I'll do this, you get. I'll do all of that for you in my next coming episode, for you guys to get exactly how you think and what you look out for on each of these time frames. Okay? Because one thing again is, it's not only about trend. Like for me now, what I showed you now about using trend as the first thing on the higher time frame. Do you know, for me now, in my own concept and in my own community, this method is already old school. To be honest, any concept that tells you to use trend as a starting one now, I'll tell you, you're just joking. You are still in old school level. Do you get? But for now, for your level, you guys can go ahead with that. No hard feelings, okay? But I've talked to you about CLT now, so that's a clue. You can use CLT to get your target on higher time frame, and you get the structure on your mid and your lower time frame, and you still trade it. It's a very simple approach. It's not a must that you always follow trend on higher time frame. All that matters is to get the direction on the higher time frame. Okay, like for example, on our gold trade, let's do a recap of our gold trade that I did over the weekend in the previous video on gold. So let's do a review of that trade. Now, on that trade now, we got the target on the weekly time frame. So now, weekly time frame is meant for what type of trader? So the weekly time frame is meant for long-term swing traders. That means those that are willing to hold the trade for a couple of weeks. Okay, so now if I was let's say I'm a long-term swing trader now, and I went to the weekly time frame over here. So let's take a look at the weekly time frame here. Okay, hold on. Let me use a different gold chart. Let me use FXCM charts. So now if I should start my analysis now on the weekly time frame over here. So what was the bias all about? Okay, let me just give you guys let me use the long-term swing trader now as a case study. So now as a long-term swing trader, my job is to start on the weekly time frame, right? To determine the trend and the directional bias. So if I determine that this is going to be an uptrend for me and I'm going to be buying, okay, so that is the thing I've figured out on my higher time frame. This guy is uptrend, you know, based now, I'll be using some certain principles over here. So my rule here is external range to internal range. That is the rule I'm applying here, which is why I told you earlier, for those that only start with trend, just imagine if I was going to the weekly time frame here, and I also want to follow what others would always do also, right? They'll go to the weekly and they follow trend. Now take a look at this. Do you know what kind of trend this guy is? It's a crazy extensive impulse. I don't even know the name to give to it, because if you want to follow this trend now, when was the last time the market did a deep pullback? Should I say here? The market even do a deep pullback here? You don't get, like, you can't even tell where the market did a very deep pullback. So telling you now that you should go and do a proper trend analysis on the higher time frame is like we telling you to go and kill yourself, to be honest. But then let me just show you a simple method I would use. So we know the external to internal range, a simple delivery method, right? So and I gave this in the last video I made on YouTube on gold. So over here we have this as the external range, price trade into the immediate internal range, which is this level over here. So this is the complete fill we have there, and we know now each of these levels are areas that price can reject from. So over here the price closed above this level. Okay, it closed above the complete fill, and of course there was a rejection. That's all that matters. So right from that moment, I will know that the market is aiming back to the external range over here. So let's take a look at the daily time frame. Very good. Can you see this is the perfect range that was just fully mitigated? If I was going to refine, I'll refine it into this fair value gap over here, which is still a perfect way to see it. A perfect trade. So now the market has already traded into the internal range over here, and it has completely filled all internal range. And I must even add, like, I must confess, because you might start asking questions like, why the price not use internal range to go higher? Why did it have to go down to this other one here? Now that's because this other one here was neglected. Yes, that's the word I would use. It was neglected. Why? Do you check over here? This price never mitigated this. You can see over here, like when price was coming down, it did not even trade into any internal range liquidity. This normally we will normally see that price to trade into the gap, and then from there start going up. So assuming that happened, then trust me, this level will not be tested at all. So but because price did not trade into this gap, that means it left behind as internal range. And now it came back for it, like, I'll come and give my money now. So price traded into this level, and like I said, you are going to follow the flow, which is a shift in structure, which I think we saw that clearly on I think it was 45 minutes time frame I used to get that last week. So this is the shift in structure over here. This is the level that mitigated. So we have this as a low, the high, the low, the high, lower low over here, lower high, and lower low over here. And this was the level I was anticipating that price was going to go and break with momentum candle. If you remember the video on gold analysis, I knew gold was going to go and break a big momentum candle over there to go all the way to the target we're expecting it to go to, which is the highest point we have here. So now, if I want to follow my flow over here, which is I've just said, you start on weekly, you go to daily, you end up on 4 hours. Now, the weekly time frame has given me direction, which is the target over here. So that's what I always want to get. Target is my main goal. So once I figure out the target over there, so what do you think I'll do next? I'll go to the let's say I'm going to daily now. Daily used to give me clarity of what I've seen already on weekly. So now daily here is showing me the clear vision. Now, if I want to choose my POI, let me just give you guys another hint over here too. So over here, let's say this is the moment price mitigated. This was the first touch. Now, clearly, there's no way I can get POI over here because I'm using a different method from what I thought earlier. The first method is following the trend, but here now I'm using liquidity as my method of determining the trend. So I can go to the 4 hours now to get POIs. This is where I can now go to. So over here, I can now start going to 4 hours over here, to get POIs. But the POI I even got for this particular buy, let me show you. This was the main POI I got for it. All of these videos were made, like they were all available online. Like I made these videos, it was on my Telegram channel. I gave the analysis that price was going to trade into internal range liquidity before buying. So let me just show you something real quick over here. Yes, this is it. So I made a particular video sometime when that price was going to trade into this level here, which was the internal range liquidity level. So now I marked out this place as a POI. Like I'll be honest, that was exactly where I marked out as a POI for price to buy for. Now, that particular day, price moved with a very long and impulsive move. But let's check it out. And let's check out where price actually traded into. And of course, to tap into a certain POI. So now price came here now and used this particular low that I was marking as my own POI. And why did I mark it? I marked that level as a POI because it was close to the liquidity I marked. And that's what we use now. Liquidity, POI is very important. So, but then price actually was interested in this other liquidity, which is why we have this level as liquidity over here, and tap into the POI, which is the one lower at this point here. So that was the level price actually traded into. That's it. Price took out the exact liquidity that we had over there, tap into the POI, and the rest is history. So now at this point also, I did not even get an entry because I had the level I was looking at for now. So definitely, what do? You change the flow, and of course get entries towards the main target. Now the target is still very far. Trust me, still very far. It's still very, very far. The target is all the way to this up. So I can even go back to 4 hours, the 2 hours, or any other time frame and then find my POI. Now this is even the time I can say I can start finding POIs. Okay, I can choose this level here as my first POI, this level over here as a POI for the place that, okay, price should pull back to this level. We're going to get a good area of, or a good rejection from here to now go towards the target. So I can now start following structure, which is the one that you guys have been taught earlier on about trend. So maybe this is not the time you guys can now follow, or this is the time you can shine. But trust me, using trend as a main thing to get the time frame or direction on higher time frame is definitely not going to work for you. I'll be honest with you, it won't work for you in the long run. So if you want to learn that, you can of course reach out to me, and you can join my waitlist for the next mentorship program, so you guys can get to learn more about this, and of course get to have a good knowledge. That's also what I would say. Have a good knowledge that you can use over and over to deliver good results for you. At least understand what you are doing. If you are in a business and you don't understand what you are doing, you don't know how you're making money, you don't know how you're losing money, or you don't even understand how the market is expected to deliver, there's going to be this constant cycle of going back and forth and not being consistent in your results. So if you want to change that, make sure you guys click the link in the description for you to join the wait list for the mentorship of PSA. So thank you guys, and I'm sure with this video I've clarified the perfect way to do top-to-down analysis, and I've showed you just one example on your most favorite pair, because this is everyone's favorite pair, not good, on your favorite pair, on how you do your top-to-down analysis, getting the direction on the higher time frame, getting your entries with the lower time frame. Okay, and again, any entry you get from here, if you want to do your normal thing as a day trade, like following the type of trade that you are, your TP, which is, if I was taking a buy from here, for example, now, I'm not going to leave and move. My take profit is going to be all the way now to where? To this area here. That is where you must get out of the trade, because that is exactly the flow. Higher time frame, which is weekly for the target, your lower time frames for your POI, whatever thing is just meant for the entry. Okay, so right now this is our ultimate target on gold. Of course, we have opportunity that can be taken along the way till we get to that target, which you can also opt on if the opportunity shows. So thank you guys for joining in and for tuning into this video. Make sure you subscribe to the channel, make sure you share with your friends, and I'll see you in the next one.